welcome back to this week's market update. Today is Monday, April 6th, 2026, and we'll jump right in. A shortened trading week saw equities gain traction on improving sentiment that the conflict with Iran may soon begin to de-escalate. As of Friday's close, the Dow Jones Industrial Average was up nearly 3% last week, followed by the S&P 500, which was up 3.36% last week, and the Nasdaq Composite leading the way, up 4.44% last week. Moving into our economic data, the March jobs report came in stronger than expected, with the U.S. adding 178,000 jobs in the month of March, led by gains in healthcare, construction, and transportation and warehousing. The unemployment rate edged lower to 4.3%, while average hourly earnings rose 3.5% from a year ago, signaling steady wage growth. While encouraging for the month of March, this represents a strong data point within an otherwise slowing labor market trend. You can see we've had a lot of volatility in recent jobs data in this chart here, and we still remain below the longer-term averages of job gains per month, overall suggesting that some caution may still be warranted for the labor market. ADP's March employment data presented a more mixed picture of the labor market, with private payrolls rising by 62,000. Hiring was concentrated among small businesses with less than 20 employees, while medium-sized and large businesses posted net losses. Sector-level trends showed strength in education, health services, and construction, which was offset by weakness in trade, transportation, and utilities jobs. Altogether, the report suggests the view of modest short-term improvement, but within a broader slowing labor market trend. Beyond labor market data, we also got the ISM Manufacturing Index for the month of March last week. It remained in expansionary territory at 52.7%. So anything above 50 being bullish, a positive indicator, anything below 50 being bearish. Within the index here, you can see we had a slight improvement in production, supplier deliveries, and then we also had prices heating up quite a bit at a faster pace than a month ago. So this is one thing we want to keep our eye on as we monitor inflationary risks, as the price of energy has shot up dramatically over the past month due to the conflict with Iran. On the other hand here, looking at some of the categories putting a continued drag on the index, employment continues to be fairly weak below the 50 mark, although it is stronger than it was several years ago. The other categories here showing some weakness, we had inventories and customer inventories also quite weak there. So overall, the ISM Manufacturing Index has been improving, a positive indicator for the economy, but there are some areas of concern that we want to keep an eye on, especially this prices index. Also last week, the Consumer Confidence Index rose slightly in the month of March, coming up 0.8 points to a score of 91.8. Within the index, the current conditions component improved while forward-looking expectations decline, reflecting some dissonance between current conditions versus forward-looking economic concerns among consumers. Overall, though, even with the slight monthly uptick here, you can see we are in a multi-year downtrend in consumer confidence, and we're very far from these pre-pandemic norms. Last but not least, February retail sales came in stronger than expected, up 0.6% month over month and up 3.7% year over year. Food services and drinking places showed notable strength, up 5.2% from a year ago, while non-store retailers driven by online shopping rose 7.5% from last year. Auto was another strong category. You can see that was up more than 1% in just that 1 month there. However, overall, this one positive month of data doesn't necessarily outweigh the trend, which you can see we had pretty flat retail sales in December and a slight decline in January. So you want to keep an eye on the longer term trend, but for now, February's data was fairly positive. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.